Welcome everybody to the Autumn Market Review 2022, which today is being filmed in front of a live audience of over 100 investors, as well as an online audience of many more. This is our 9th annual investor conference, and after 9 years, I am still waiting for a year when we don't have to talk about recessions, uncertainty, doom, and gloom. The media hype has reached fever pitch this week, but if there is one thing I've learned in the last decade of doing these events, it's that real estate stands tall through thick and thin. And for the hardworking private investors who buy into it, when the going gets tough, the tough certainly get going. My name is Nilesh Patel. I'm a principal at Prideview Group, and I specialize in the areas of portfolio management, finance, tax, and insurance. And more importantly, I am also your point of contact if you'd like a round at Sandy Lodge Golf Club. And if you're feeling even braver and want to go for glory in property's biggest cricket day, then I also organize the Prideview Cricket Cup every July. So to today's agenda. After my short introduction, David Margolis, partner at Acuitus Auctions, will be giving you the lowdown from the auction room, as well as an update on the property finance market. He will be followed by Mark Hoffman, director at Prideview, who will be talking about some of the opportunities thrown up by the current market conditions, and will be giving examples of deals done in the private treaty market. After that, I shall bring things to a close, and hopefully, for those of you who have not run a mile, we can stick around and have a few more drinks and network thereafter. So, live audience, is everybody feeling like they're getting in? Anyone needs some assistance? We have a few technical guys from Prideview here today to assist you. Priyesh, Sej from the AV team, need to help anyone out? All right, shall we give it a go? All right, so what brings you all here today? And for those of you online, what brings you to log in and skip your dinner or football match or whatever else could be going on this evening at home? Last year, we asked you very simply if you just wanted to get out of the house. Obviously, now we've come back to a bit of a normality. We needed to throw in some free drinks as well to coax you out. Is that why you're here today? I think half of the Prideview team are there for that reason. But seriously, are you buying? Are you looking to buy? Perhaps you're a seller thinking about exiting. Are you a landlord with 1 or 2 or 3 management issues? Is finance on the agenda for you today? Or are you here just to learn, get an opinion on the market and see where it's going and then make a decision? If you could please log into the Slido app and put your answers in. I know many of you will be coming here wearing several hats today, so if you can think about what is the most relevant to you today, it's really helpful for us, because then we know exactly what we have in the room today and who we have watching online. Okay, so let's see what the results are saying. So most people want a market update. 20% want free drinks. Interesting. Okay. Maybe I should have done a poll on what type of drinks you want. So actually that's an interesting result, because I think given what's happened this week and the turmoil in all markets across the UK, I think most people do just want to take a step back and see what's going on. And I think the timing of this event is perfect to help start answering some of those questions you must have. It's good to see a few more people looking to buy. I know there's a few opportunists out there, and that's great to see. And we will help service that demand in the next year or so. And as for the free drinkers, just hang in there 1 more hour tops, and there'll be more drinks coming your way. Okay. So I won't dwell too much about Prideview Group. I don't doubt you know who we are, but I'd definitely like to focus on this classic snap from our new office. As you can see, we are one of the coolest teams in the business. And the other nice little fact is since March 2020, which is when COVID all began, those so many years ago it feels, we've done over 300 million pounds worth of property transactions across all sectors. So at least you know, Prideview know how to operate in a crisis. Over to introductions. So buyers and sellers, please take note of the members of our agency team, all of whom are here this evening, barring Max, who is based in Israel and is tuned in online at the moment. Landlords, this is our management and finance team. Again, please reach out, whatever your concern may be. We also have a host of external specialists in the room today, covering the fields of law, finance brokerage, rent reviews and lease renewals, and property insurance. Please ask your Prideview contact for an introduction. Okay, one more poll. Let's see if we can get a few more people to answer this one. So, back onto Slido on your mobile phones if you don't mind. Where is the best home for your savings currently? So we struggle to phrase this question, but the essence of it is, for whatever money you've set aside from your day-to-day business and living needs, where would you say is the best place to put it right now? And we're looking long-term or medium to long-term. We're not looking for speculation. We just want to know where is a good place to park your money for the next few years, if you have some to park. I know many of you are very smart and will be looking at multiple sectors right now in order to diversify. So again, I'd like to think about where the bulk of your savings would be best placed today. Everyone has different ideas, and it'd be just great to canvass that and see what are people thinking right now amidst the current conditions. And for those of you who don't have your savings, don't worry, we won't ask you to leave, but please just give a hypothetical answer. So I'll give you a minute or so to try and answer that question in the best way possible. Whoa, that's good. Commercial property, 44%. So that means all my family in India are logged in online. That's good to know. Okay, that's good to see. Alternatives. So alternatives is a very wide sector. Wine, art, crypto. That's doing quite well as well. Residential property, of course, you would expect that. And I wouldn't be surprised if a lot of you already have residential property in your portfolios. Any comments from the panel on what we're seeing here?
I like that answer a lot, actually, commercial property. I didn't like the answer before, by about 2% of you looking to sell. Doesn't bode very well for our next auction, but there we go.
So the general feeling is we have the majority of people here today looking at commercial property closely as an investment class for the next few years, and the majority of people looking for a market update. So that's what we do, commercial property market updates. So on that note, I think I should introduce you to my friend and colleague, David Margolis, who is the partner and auctioneer at Acuitus, and he will be followed by Mark Hoffman, director at Prideview, and together they will be providing you with a whistle-stop tour of the market we find ourselves in today, with plenty of pointers as to where it is headed going forwards. So David, over to you.
Well, thank you, Nilesh, and good evening, everyone. It's very delighted to be here tonight. I was last here, I think, a few years ago, and it hasn't changed. The room hasn't changed, and you all look a lot younger, actually. So there we go. We're doing something right. So, ladies and gents, I'm just going to get to the right page. Hopefully I can do that right. My IT skills are... There we go. Wonderful. What's on tonight's agenda? So there we go. I'm going to talk about the following things. Firstly, auction market snapshot, ladies and gents. How is 2022 shaping up in the commercial property auction rooms? And how has 2022 fared to date compared to 2021? So I like a few facts and stats. I'm not going to try and bamboozle you too much with too many graphs, but we are going to talk sale volumes, lot sizes, sector breakdown, average auction yields, location preference, etc. And also what drives our market. A brief look at our wonderful economy. I'm not an economist, by the way, and I don't pretend to be, but a brief look at our wonderful economy through the eyes of our buyers and sellers, and how we think the events of the last few days are going to affect the auction market going forward. I'm also going to give you a finance and lending update for a lot of you private investors out there. What is the appetite at the moment from the clearing banks and the challenger banks to actually lend money at auction at the moment? And also the effect of future loan renewals, which is pretty important maybe for a few of you who've got portfolios. And also, finally, what's been actually happening in the auction room. Some real life examples of things that have sold sector by sector, and also what lies ahead. So, as I say, I'm not going to put too many of these slides up with these squiggly lines, but this is a rather important one. The economy, ladies and gentlemen, we all go home every night, and what have we been doing for the last week? My gosh, we turn on the TV and all we hear is the following words: financial turmoil, fiscal policy, monetary policy, tax cuts, interest rate hikes, pensions turmoil, inflation, stagnation, depreciating currency. My God, are we all sick to death of it already? And it's only been a few days. But you know something, guys? It is important. It is important. I'm not here to talk economics. I'm really not. But these things all affect the way we are spending our money and investing our money. And this one graph I'm going to put up today, inflation, is obviously key. It's at its highest level, as you know, for 30 years, an absolute generation, at circa 10%. And it was last at 10% back in 1989, 1990. But at that time, interest rates were a whopping 15%. Now, and I stress the word now, we're at 2.25%, but clearly it's going to be climbing quickly. Now, many of our buyers in the auction room are and actually have been cash buyers. So climbing interest rates, there will be huge increases in mortgage repayments for people. You've all seen that there's far more expensive deals, etc., coming on the market. And actually a lot of these deals are actually being withdrawn from the market. But if you have cash, if you just think about it, if you have cash, this is now being eroded away by high inflation. So if you've got cash, go and spend it in property. It really is a great opportunity to invest in real estate. But let's be positive on the economy. We've all heard about GDP and it's not so bad. Obviously not quite as good as the Eurozone in America, etc. But look at the stock market recently. And a lot of you may have shares in FTSE 100 companies, FTSE 250. The FTSE 100, ladies and gents, has dropped 6% in a month. That's pretty strong, and 5.5% across the year. We're hovering at around 7,000 at the moment. And the FTSE 250 going down the ladder has dropped by almost 10% in the last month and over 6.5% in the last 5 days. Okay, so it's pretty damning. Other positives, you'd like to think tax cuts and the weak pound should, in theory, lead to increased demand from domestic buyers and also overseas buyers. So think about that if you're trying to sell something or want to sell something. So the auction market itself and how 2022 has been shaping up. Let's go to the next slide there. Well, actually, this is the period from September last year to August this year. I haven't got the September figures through this year. We're still in September. But that's the year, pretty much the year to date. And actually, if you look at 2022 in the commercial property auction rooms, it's been pretty healthy so far. Lots offered are up about 15%. Lots sold are up about 10%. Percentage sold has actually dipped slightly, but that's not surprising given the increased supply that's come on the market. And all commercial property auctions, the total raised under the hammer so far this year is £1 billion in all commercial property auctions so far this year. And that's about 10% up. And by the way, that 955.6 should say million, not billion, but there we go. So it's about 10% up from last year, which is pretty encouraging in terms of volumes. And then very briefly, so you probably need to go to Specsavers for this slide, so I'm not going to dwell too much. Very briefly, looking at commercial and residential as a whole, the figures on the screen, therefore, are the combined figures for both commercial and residential. And in summary, ladies and gents, there's been an increase in volumes raised and lots sold in the commercial auction sector, but a slight decrease in both volumes raised and lots sold in the residential rooms this year. But commercial transactions still only account for a quarter, 25% of the total auction market. So the commercial auction room is still pretty small compared to what's going on in the resi world. Average lot size, I'm going to talk about that. this has actually been really encouraging this year. And in the London commercial auction houses, the average lot size is up almost 20% this year compared to a 10-year average. So that means that sellers have had confidence in the auction market, the finality of the auction contract, the auction date, very, very important. Gavel goes down, job done, move on to the next. The average lot size this year in the commercial auction rooms, in the London commercial auction rooms, is just over £700,000, 706,000, and that compares to 592,000 as a 10-year average. And almost 20% of lots sold in the London auctions this year have been above £1 million in terms of lot size, which is quite encouraging. So there we go. There's a little graph, another squiggly graph, but showing the healthy rise in average lot size over the last few years. The yellow line is the 10-year average, and as you can see there, the trend is going up, which is good news. And then finally on lot size, you will see in the first half, if you just concentrate on the final bar here, which is probably the most important one, which is the first half of 2022 in the commercial auction rooms. And 22% of lots sold had a value of over £1 million in the first half of this year. And in the last 10 years, £1 million plus lots sold at auction accounted for just 12%. So again, emphasising the confidence that buyers and sellers have had in the auction process recently. And actually only just over half of the lots sold this year at auction have actually been under £500,000. So there's a real change. Sector. The sector breakdown. High street retail, still the darling of the auction market. It's what most of our buyers understand. And again, lot size driven, dare I say, but the high street is still the most popular sector in terms of volume in the auction rooms. It has dipped slightly this year compared to the 10-year average, as you can see, but still it takes up most of the auction lots you see in the auction rooms are retail focused. Industrial, ladies and gents, that's come up quite a lot, and that includes trade counters as well, by the way. When we talk about industrial, which sort of quasi-industrial, quasi-retail, they're significantly up in the auction rooms. Offices, not many of those have been traded, perhaps not surprisingly. People working from home, etc. It'll be interesting to see when people's energy bills go up. They'll all leave home and then come into the office again. Let's see what happens. And then the leisure sector. There's a slight uptick in terms of quantum of leisure lots being offered and sold in the rooms this year. But that's the broad breakdown. In terms of yields, have a quick look at this. Well, prime yields have actually been falling at auction as investors strive for quality. Prime yields in auction actually below 6%. It'll be interesting to see what happens coming up in the next few months with interest rates rising. But as I say, most of our buyers are cash anyway, and they all want quality. Secondary and tertiary yields, as we'll see in some examples coming up a little bit later, they're moving out certainly over the last 2 quarters and probably got a little bit of way to go. And then location. It's still important in our world. There's still a very sizable gap between yields in London averaging at just below 6% and the rest of the UK averaging above 8%. But again, there's pockets of wealth, especially when we talk about retail. It's not just a straight north-south divide. There's pockets of wealth in the north, east, south, and west. And there's those specific towns where we always have a good private investor following, where people come, the local money comes out, even for retail. But there's still, as you can see, a big difference between London, Greater London, and the rest of the UK. So that's that in a snapshot. Now, lending for private investors. I actually caught up today with Stuart Buchanan. Some of you may know Stuart. He's our finance director, runs Acuitus Finance, and he's given me a brief overview to which to relay on to you guys. And we're going to have a quick look at interest rates, especially current swap rates. We're going to have a look at commercial investments and where the appetite from the banks are to lend in which sectors they're lending in, and then also, very importantly, bridging finance. And bridging finance in our world is incredibly important, as we'll see shortly. So here we go. Look at this. Interest rates and swap rates. Well, we've had 6 rate rises so far in 2022, now up to 2.25%. We all know that's going to go up, certainly by the 3rd of November, if not sooner. And look at swap rates, 5, 10 and 15-year money. I mean, it's quite incredible. Gone up significantly from March this year. and those were the rates as of yesterday. They may have changed slightly today, but they are up to date, pretty much up to date. So 5, 10 and 15-year money has actually risen over the last year by about 400%. So we're now going to move quickly on to the next slide. It's fact. It's fact. Appetite from the clearing banks. Well, there's certainly lending in the industrial logistics sector, and that includes trade counters. Offices, unsurprisingly, they're very selective, and retail, very, very cautious. And Stuart told me today that there's lots of clearing banks simply not renewing on loans where people have more than 30% of their income in retail. So if you guys have got renewals coming up, start the process early, because it's not easy, but it's a good idea to start the process early. Challenger banks, much more aggressive, lending at 70% loan to value, and they are lending on retail as well. So that's encouraging. And as I say, the message from Stuart this morning is loan renewals will be challenging as interest rates affect debt service cover. And what do I mean by that? Well, higher costs are now coming through as interest rates increase. And the other effect of higher interest rates is how it affects your debt service cover if you're coming in for loan renewals on your portfolio. Many lenders do have quite restrictive debt service cover arrangements. So if you have loan renewals coming up, as Stuart says, the advice is to start early. Bridging finance. As I say, this is the one big criticism we always get of auctions. It's so quick. We come online 3 weeks to the auction, sometimes a bit less. I've got 4 to 6 weeks to complete and find the rest of the money. Well, bridging finance has become more and more important. And actually, I will plug something that Acuitus do here, if that's okay. We have a tie-in with Octopus Finance. And by that, I mean that all properties that we sell under the hammer, ladies and gentlemen, under the hammer, with a value of £500,000 or more, qualifies for bridging finance, automatic finance, in other words. There is no credit approval required. There's no valuation required because the hammer price is the valuation. There's no solicitor's title report needed, and your loan will be processed immediately, normally 60% loan to value. And that's taken up by quite a lot of our buyers, and normally on a 6-month term. So in summary on the finance side of things, well, I think interest rates will double rather than may double. I wrote that slide a couple of weeks ago, but that's now will double. Commercial lending, as I say, allow lots of time for loan renewals. And do speak to Stuart, by the way, if you need any help. And bridging is required, as you can see, for most new purchases, unless you're paying simply out of cash. So this is the bit you all like the best, I know. Market snapshot. What's been selling in the auction room this year, ladies and gents, and what lies ahead? Now, these are real examples of things that have sold actually in our room this year. And some of them you'll know probably quite well. I'm going to start off with London. Probably quite apt to say London remains king now. We've got His Majesty, obviously. Ruislip, London HA4. This is a dentist at the bottom end of Victoria Road. For those of you that know it, we sold this in our July auction. It's been a dentist for about 35 years there and let until 2029. The flat upstairs was sold off on a long lease for another 90 odd years. The rent coming in downstairs, 16,570. We had 14 registered bidders. 14 registered bidders. These days with auctions, as you probably know, because we're not in the hotel rooms, if you're bidding at an auction, you must register to bid beforehand. Don't think you just come onto the auction and press a button, press return, and all of a sudden I see you bid. You must register beforehand with all auction houses to actually partake in an auction. But we had 14 registered bidders. It's a small lot. It's a classic auction lot. And we sold it for 4.5%. And it was reserved not at 4.5%, much less than that. Going down there, Willesden, London NW10. Some solicitors, this sold earlier this year as well. Whole property was let to the solicitors until 2029. 20,000 rent, which looks quite modest. It's the one with the black fascia there in the middle, okay? We had 10 registered bidders on this, and clearly the angle here, there was a residential angle. I mean, the whole thing was let to the solicitors, but one day you could surely turn the upper parts into some residential, and it sold for 3.5% with some very, very spirited bidding. Staying in London, another one in Kenton. Some of you will know that one. It's Belmont Circle. This was an overriding lease to a pub tenant, and it included 750 square foot of residential upstairs. But overriding lease, including residential, £27,000. Even in today's world, that is not a lot of rent. Low rent for a pub and a 4-bed maisonette. And that sold, ladies and gentlemen, for just under 630,000, you can say, a 4% yield. Again, cash buyer. Shepherd's Bush, moving slightly further up the lot size. This was entirely let. This is on Uxbridge Road. Entirely let to a Polish deli until 2026. There included 3 flats, and the value here was clearly trying to release the 3 flats at the end of the lease. It's £50,000 in total. Not a huge rent, really. And it's sold for 4.5%. Again, we had 5 or 6 bidders, slightly less bidders because the lot size is that bit bigger. And then Tooting. This is a good one. This is located very close to Tooting Broadway. At that busy junction. This was a Ladbrokes downstairs. They were actually shop fitting, so forgive the white fascia. And 3 floors of offices upstairs with separate entrance, underlying resi value. There's a theme coming here, guys. And this sold prior, actually. We went to best bids before the auction, and it sold for 6% on the auction contract prior to auction. The high street generally, are we over the worst? Well, I have to say with high streets, if the rent is sustainable and the rent has been rebased and it looks like a proper rent, we will find buyers. And also what our buyers like is alternative use again. So this little lot in High Wycombe, for example, we sold this in July this year, entirely let to RAL, the amusement people, with the ground floor and first floor. The tenant's been there since 2005, I think it was. And again, the angle of the upstairs to one day create a flat upstairs. 28,000 coming in, not a huge rent. Over 20 registered bidders on this, and it's sold for sub 5%. So really, really nice little lot. And on the other end of the spectrum, Weston-super-Mare. The name probably says it all. It's not an easy town, but this was actually this was a rent that went from 90,000 Superdrug to 60,000 Superdrug. So proper rent reduction. It was about 12,000 square foot of space. And they renewed on a 5-year lease with a break at 3, as Superdrug tend to do. They tend to put break options in after year 3 on most of their leases. Are they really going to break in 3 years' time? Probably not, but there we go. And it's sold for just over 9%. So, I mean, that's a really quite attractive yield if you want to invest in Weston-super-Mare. Are they really going to go from there? Probably not. So if you believe in the tenant, believe in the building, that's the kind of returns you're getting. And it follows on Kings Lynn. This is pretty much a prime shop in Kings Lynn, 12,000 square foot of space. Bon Marsh and Monsoon both have had restructuring. They've gone through restructuring. They've gone through CVA. Both let on new short leases. And actually the Monsoon was on a turnover rent, which is quite common now. £58,000 in income total, depending on the turnover. That could go up or down. And this sold for £640,000 off a £500,000 reserve. I will not tell you what our client paid for this back in 2006. You won't believe me if I said it, but there we go. And we actually had 4 registered bidders on this to give you a bit of a flavour. But all 4 bidders were really seasoned investors. They are regular buyers of ours. They know what they're doing. Big car park at the back. And actually, it's a good little buy. And then the last one I put there because it's in Lincoln, which is a cracking city. It really is probably one of the best shops in Lincoln. It's let to Clintons. They do still exist, but they're on a license, so they could come out. And this was bought by an owner-occupier. And it was bought by one of these national noodle chains who are popping up here, there, and everywhere. The rent that Clintons were paying were $50,000. It's pole position in the city, and it's sold for $850,000 with about 3.5 minutes to go before the auction they exchange. So there we go. That's how quick things can happen. Convenience stores. A lot of you guys probably like to invest in convenience stores. We've had a number, and I've picked a few out here. The first one in Notting Hill, that was probably more Latimer Road than Notting Hill, but there we go. We called it Notting Hill. Mutual break option, this one, ladies and gentlemen, coming up in 2024. And that's the interesting one. A lot of these convenience stores, you see 10, 15 years, RPI increases, etc. Lots of land. This was actually in and amongst the chimney pots there. And it's sold, we had sold it on behalf of an Oxford college, and we sold it for 5%. But, are they really going to go anywhere? Probably not. And if so, you've definitely got a residential angle. It's got resi all around it. Harrow. Slightly earlier in the year, the Tesco Express, upper part sold off here. This is on Shaftesbury Avenue, so sort of Harrow, near Harrow. 15-year lease to Tesco with a break at 10. Upper sold off, but reversions in about 60 years or so not too far off. And it's sold for 5.5%. And then the last one, a little bit further afield to give you a bit of a flavour, Immingham. You probably never even heard of it, nor had I until we took it on, but there we go. It's Humberside, ladies and gents. It's a farm foods discount supermarket operator. They signed an unbroken 20-year lease, which doesn't happen very often. But interestingly, they only had a rent review at year 10, so they weren't the 5-yearly reviews. So the rent was fixed at 80,000 on 15,000 square foot. They just expanded into the other shops next door to create one larger unit. And, that's rare to get 20 years unbroken, 5.5%, even in, what's it called? Immingham, that's the word. Parades. Oh, the auction market loves parades. And I tell you what, the auction market loved this one in Harlington. We were inundated. It was an unbroken parade, 5 shops, 5 3-bed maisonettes. Some of you are nodding here. You bought it? Well, there we go. That's a wonderful purchase, sir. Why didn't you tell me? No. No, honestly, well, you saw how much interest we had. You were probably at the viewings. We must have shown 20, 30 people round. There's 9 garages. It's fully let. Hadn't been offered for about 40 years. And we sold it for 2.46 million, about 5%. So I hope it's working for you. And as long as they're all paying the rent, that's the most important thing. Wonderful. And just to compare, another parade in Northfield in Birmingham. It's actually not a bad Birmingham suburb, but the upper parts on this were sold off. So it was much drier, hence the yield. And some of the rents were a little bit over rented. There was a decent tenant lineup, but some of the rents were a bit here, there, and everywhere. But 10% for a parade, a decent parade in Birmingham, formed pretty much half of the suburb of Northfield, actually. But there we go. And the last one in Wickford as well. I put that there because that's got an HMO upstairs, whole building on a 999-year lease rather than freehold. So not quite a freehold, but long enough. 4 shops, 1 sold off at the end, and an HMO upstairs sold for just under 8%. So giving you a flavour of some parades. Trade counters. Not sure the heading there's quite right. Trading over the counter from an auctioneer, but there we go. They're very popular, very, very popular. They quasi-retail, quasi-warehouses. Screwfix, great household name, let until 2027. The break clause had just gone. There was a break clause earlier this year. They didn't exercise it, so it was a good time to sell. £75,000 rent, £12 a foot, 5.5%. And then the last 2 there, pretty similar actually. 2 builders merchants, timber yards, 1 in Gloucester and 1 in Lingfield down near Gatwick. Lots of land, and people love things when they come with lots of land. So if you've got good income, RPI increases in a lot of these, and then you've got a land play at the end of it. They were both let to Grant and Stone on very nice long leases, 15 years, and 1 sold for 5%, and the other one was quite a big lot size under the hammer. But there we go, we sold it under the hammer at 6.5%. We had 3 or 4 bidders on the day. Development opportunities. People love development as well. There are things people don't like in auctions, by the way, and I'll come on to that. It's not all rosy, but to this little one in Euston, NW1, very close to the station, former restaurant and vacant maisonette, about 1,600 square foot. It was only small. We sold that for £500 a foot, 840,000. Nice one in Slough, right by the Uxbridge Road, a former pub. Half an acre, I think it was, John, something like that, but half an acre, a little bit more. Crying out for residential or community use, knock down, start again job. And that was bought for 750,000. And then Edgware, many of you will know this, I'm sure, as you come up High Street, turn right into Station Road. I think you've got the Aldi and Middle on the left. And it's that pub on the left-hand side with parking. You had some ASTs there, bringing in 150,000 pounds. Again, half an acre, a little bit more. And that sold for a very strong price at 5%. So it was a good one. Landmark building, pretty much. You all know it. You've all driven past it, I'm sure, many of you. And as I say, they're not all easy. And shopping centres is a real challenge. But they are being bought if they are priced right. And we're not dealing with Brent Cross or Blue Water. I wish we were, not yet anyway. But these are places like Newcastle under Lyme in Staffordshire. This was bought by an entrepreneurial, opportunistic type of buyers, and that's who's buying them. This was 37,000 square foot. It had 3 shops trading out of it. Card Factory, Iceland, they were holding over, if I remember, and 2 or 3 local tenants, almost kiosks, 15 empty units. You're looking at me, madam, think, why does someone want to buy that? You're probably right. But you know something? If the price is right, people will buy it. Had a gross income of 102,000, but once you take off all the voids and service charge liabilities and empty rates, it was a negative cash flow. and that's sold for £475,000 for a whole shopping centre. That is what you can buy if you want to dip your toe in. And then, just by way of summary, you can see what our buyers like. You all like well-located, well-let, mixed-use, value-add. They're the 4 words to sum everything up, really. But pricing, well, it is coming under pressure. I think it is, or it will be soon. We're very, very careful when we price things up for auction. Well, I hope we are. Will borrowers come under pressure? Well, they're not yet. We haven't seen the raft of for sales we all thought we might do, but hey, it might be around the corner. Let's see. High street retail. There is a market for it, but really retail needs to have that residential angle or a demonstrably low rent or sustainable rent. If you've got a single let shop, it's over rented. There are buyers, but the buyer base is pretty thin and we have to get pricing straight on. Valuations is a big bugbear of ours in auctions. We often see valuations on behalf of pension funds. Some of them we believe is still too high. There's a time lag. They're valued half yearly. The market moves much quicker, or we certainly move much quicker. But that's also an important consideration. And then finally, long lease, good covenants. You've all heard that, but limited supply, unfortunately. Industrial trade counters, that might change. I don't know. I mean, that market's been pretty hot for a while. I wonder if institutions might sell a few things off and they may come to auctions. Offices, tremendously difficult with working from home, as I say. Energy efficiency standards, that's quite important for you guys, especially next year, by the way, with the new rules coming in on EPCs. I'm sure you all know that from April 2023. Okay, it's one to look out for, that your property needs to have an E rating or better if you're looking to sell. And then finally, asset management, value add opportunities when they're underpinned by alternative use, etc. Providing the realistically priced, they will find buyers. Oh, look at this. We have a poll. Fastest finger first, ladies and gentlemen. On your keypad, should I say, or on your phones. We have a poll after all this. And I'm going to give you won't take very long to look at it. It'll be interesting to see what the audience thinks. Which sector represents the best opportunity for you guys next year? I'm not surprised by what I'm seeing, I've got to say. Developments, which we've talked about a lot. No one wants to buy a shopping centre in Newcastle under Lyme. It's coming up at 300,000 now. Okay, so developments looks like, if you're all done, the clear winner at 33%. London, still London. Trade counters, absolutely. Parades, I thought might be slightly higher, but some of the lot sizes may be slightly large. Convenience stores still generally popular. High street, don't discount it. Just have a look where it is. If it's in pitch in a high street, you're generally going to be okay. People still need to go shopping, as you know, but that's interesting to see that. And there we go. That's pretty much all. I've got to give the Acuitus plug. Our next auction, ladies and gents, is on the 3rd of November. And the catalogue will be live on the 14th of October. That's it from me. I hope I haven't overburdened you with too much info. Thank you all for listening. And questions will go straight to our compere Nilesh. Thank you very much, ladies and gents. And now over to Mark from Prideview.
Good evening, everybody. Good evening and welcome. So, the brief was this evening, positivity, no doom and gloom, encouragement, make it sound interesting, make it sound good. Well, I've had some challenges in my time, but writing this speech is right up there with one of the more difficult ones. So I thought I'd start by giving the more depressing news, get that out of the way, so we can focus on the more positive news after that. And let's start off with a bit more information on our rising interest rates. So as I'm sure you're aware, the Bank of England raised interest rates last Thursday by 0.5% to 2.25%, its highest level since 2008, in an effort to curb mounting inflation. However, the current levels of inflation are more supply-driven rather than consumer demand-driven, and therefore it's questionable as to whether or not rising interest rates will actually curb inflation. As interest rates increase, it becomes more expensive to borrow money. And this is going to have a significant impact on the debt-driven property market. The reality is that the arbitrage between all-in borrowing costs and yields is already too narrow, and it will make buying properties with debt very difficult. The sub £2 million market won't really be affected too much, as most investors, as David has said, are still able to buy with cash, as was the case 10 years ago. Cash is and always will be king. The market that will be most affected, we think, will be the £2 million to £5 million sector. This typically is where most debt buyers are currently looking. And the reality is that in order to have positive cash flow, you're going to have to buy at yields at 7% plus. Now, this is challenging, if not impossible, in the convenience store drive-through sectors because sellers haven't yet lowered their expectations on values. Inevitably, this will happen. We actually see this as an exciting time for our clients. Shift in yields. For every challenge that we have, we're also faced with opportunities. For those that are old enough to remember the early to mid-1990s, the debt market was virtually dead as interest rates remained very high from the peak of 1989. What it meant was that cash buyers were able to drive the market and pick up government-let buildings for double-digit yields. Now, whilst I don't think we're going to end up at the same sort of place, there's undoubtedly going to be some price corrections. There's going to be a lot of deals that fall through because of the recent interest rate increases. And there'll be an opportunity for cash buyers to build their portfolios. The necessity for a quick exchange and completion will be even more important as the banks start to put the squeeze on lending to value ratios. Up until now, and even throughout the pandemic, we didn't really see any forced sellers, and therefore the yields remain strong. But now we need to be patient and be ready to strike when the opportunities present themselves. If we look at the two examples on the slide here, the off-market acquisition of 4 shops and 12 flats in Leeds, and the on-market acquisition of the JD Sports and Specsavers in Worthing. These are good examples of properties that didn't sell, and the seller was prepared to be realistic on pricing and move the yields out for the right buyer. We expect to see more of this. The pandemic. The fact that we're all sitting together in this wonderful venue for our annual review would suggest the pandemic is over and everything's back to normal. However, I think it's safe to say that the UK and indeed the world is still recovering economically, financially, and socially from what was possibly the most significant health crisis the world has faced in a generation. The impact of lockdown had a more significant effect than just homeschooling and keeping 2 meters apart, unless you're a government minister, of course. The cost of furlough, the bailout loans guaranteed by the government, have to be repaid at some point. And the impact of these repayments will affect not only us, but our children as well. As far as commercial property is concerned, the pandemic enabled the market to take a step back and reevaluate. It changed the high street, the leisure industry, and the office market. But it isn't all doom and gloom. The high street is showing signs of recovery, and office rents, particularly in central London, are now reaching record levels, and we'll concentrate a little bit more on that later. David touched upon rebased rents, and I genuinely think this is a really fundamental result of the pandemic. One of the most important things to consider is the rent that a tenant is paying. Is it sustainable? Since the pandemic, leases have been renewed and re-geared, and in a lot of cases, the rent has come down to much more affordable levels. Therefore, looking forward, it is much more likely that tenants will stay in business, and there may even be some rental growth. Here's an example of a property that we sold in Portsmouth, and this was a lease renewal to Mercer Slots, where the rent was reduced significantly as a result of the pandemic. And as a result of that, demand for this investment was incredible. Keep that in mind when you're looking at the high street. Political uncertainty and the pound. Well, it's all been a bit of a nightmare for our government, hasn't it? It's true that they had to deal with an unprecedented worldwide pandemic and clearly didn't do a very good job of it, as it directly led to the resignation of our esteemed Prime Minister. The months of uncertainty that followed, including speculation as to who the new Prime Minister was going to be, caused more problems for the country. And uncertainty is the worst thing that can happen to the commercial real estate market. Do you buy? Do you sell? Do you hold? Now, for anyone that went on holiday this summer, you don't need me to tell you how expensive the US, Europe, and Israel have become as a holiday destination. That didn't seem to bother my wife and kids, however. The strength of the dollar, the euro, and the shekel against the pound, though, is a good thing for commercial property investment, as overseas investors now see the UK as a hedge against currency. The UK commercial property market is looking cheap, and the influx of foreign investors is going to maintain and improve the outlook of commercial property. Typically, overseas investors have always favoured central London, as that is what they know and they're familiar with. But in fact, overseas investors are now looking throughout the country, especially outside of London, where it's perceived there is less competition and more value. Now we have a new Prime Minister and a new cabinet, or at least we did this afternoon. It's hoped that this will bring some stability to the market. You only have to look at exchange rates to see how the market reacts to news in the UK. The pound has never been weaker against the dollar, the euro, the shekel, but the good news is it can only get better. Here at Prideview, we're proactive. We've recognised the demand for UK property from overseas investors, and we've opened an office in Tel Aviv to bring new investors in commercial property to the UK. Since our last investor presentation, the world again is a very different place. But the Prideview dealing team carries on. We have so far in 2022 closed 63 deals, totaling £126 million, with an average of £2 million per deal. This slide, however, demonstrates once again that income remains the most popular investment, with 35 deals in the supermarket and medical sectors. One such deal that we were particularly pleased to have been involved with was the off-market acquisition of the Acre Mill Hospital in Huddersfield for £10 million. This was a complicated transaction as it was a joint venture between the NHS Trust and Henry Boot Developments. The deal was contingent on a leaseback by the NHS for 25 years with annual RPI kickers. The yield on this was just over 3%. We were also involved in the off-market acquisition of a Travelodge hotel in Weybridge for £4 million. The hotel sector has again been badly affected by the pandemic. So to buy a long lease to a branded hotel was very encouraging. And what was particularly interesting about this deal was that the rent reviews were linked to RPI and were uncapped. Now, here's a live deal for you. We don't have a slide, but because it's literally just landed in our inbox this afternoon. So if anybody's brought their checkbook with them, come and talk to one of the team. An Iceland, in fact, David, you might want to auction it. I don't know. An Iceland investment in March in Cambridgeshire, let until 2035. 1.485 million, which represents an initial yield of 8.32%. If that's something of interest to you, come and talk to us. It's literally live as we speak. Sales, disposals. We remain active on the disposal side of the business and have achieved some fantastic prices on convenience store sales. This is an example of a Sainsbury's that we sold in Littlehampton. Due to a combination of our innovative marketing team, we generated a substantial amount of interest and ultimately ended up with two parties in an informal tender. The property sold for £5.2 million, which was 600,000 over the guide price. David again touched upon retail parades and the demand and some of the fantastic prices that Acuitus have achieved on retail parades. And these have clearly remained a strong performer in the sector. Like with high street retail, our focus has been on the tenants, their business model, the rents they pay, and the use of the shops, especially when there are flats above the shops. A lot of retailers are in a position to buy their own freeholds, including the residential. This gives you a great opportunity to break up parades, trade them in the auctions, and of course to the tenants direct. Again, we would suggest that parades anchored by a convenience store with parking facilities will be a strong performer. This particular parade comprises 6 shops, 12 flats, 6 garages, and a roof aerial, with scope for redevelopment potentially involving the car park in the rear. This particular property was acquired on the market. It offers the potential for conversion of those upper parts to residential, and also break up potential and lease re-gears as well. And offices, I said I was going to touch upon this in a bit more detail. So this time last year, I stood here and said, this is going to be uncertain. And nobody really knew whether we would be returning to the office in the same way. We'd all got quite used to our Zoom meetings in our tracksuit trousers and our T-shirts. But at the time that some of us were bordering on obese alcoholics, it was time to return to normality. Now, whilst we're confident that there will always be a need for offices, it's likely that there will need to be a need for a more flexible approach to lease lengths. The landscape for City and West End offices in particular is changing. Very high rents, high service charge and rates has caused a lot of large firms to consider the necessity for long leases. Now, whilst this remains the case, the demand for offices in the West End of the city has skyrocketed. This particular property in Marylebone Road was openly marketed, and there were some 60 inspections by developers, investors, and owner-occupiers. Many looked at redevelopment and a change of use to hotel or student accommodation. But actually, the simplest model was a clean office refurbishment. As an example of the level of demand, the agents were quoting £22 million, and our clients paid £28.45 million. The business plan was simply to buy at £900 a foot, spend around £200 a foot refurbishing it, let it, sell to an institution in 2 years' time for £1,700 a foot. I said at the time of our seminar last year about value add, and the sentiment pretty much remains the same. Disregard hope value when valuing assets, particularly developments. Hope value is too often factored into values by sellers when in fact it's speculation, certainly not guaranteed. We believe that the fundamentals of the deal must stack up in order to consider the worst case scenario. If there's potential to add value, then this is profit. We've seen an increase in build costs. We've seen an increase in the time taken to get building materials. Added value opportunities are an excellent way of increasing the value of your portfolio. But of course, you have to consider the risk reward. These are some examples of development opportunities that we've been involved in. A vacant pub in Windsor with planning to build a co-op and 5 flats. The buyer was happy to buy the site with the planning consent, with the pre-let, and take on the build. Harrogate was another acquisition, and this represented an interesting opportunity for a substantial redevelopment of the upper parts in an affluent location with strong resale values. And so our final poll, assuming of course that you're not going to kill yourself, and having now considered the auction and private treaty markets, how are you feeling? Does opportunity knock? Do you need to cash out? Are you going to hold and ride it through? Are you undecided? Or are you going just to run out of the door? Opportunity seems to be knocking, which is rather fortunate for us. So that's good. Excellent. Okay, great. So opportunity knocks. So thank you very much indeed for listening. I'll hand you back to Nilesh to close this evening's session.
Thank you very much, Mark. So I will take it now to a close. And thank you, David, as well, for your fantastic presentation. So as is customary, I'd like to open the field to questions, which can be sent through via Slido or just shouted out now. And of course, for those of you in the room, we will remain on hand to speak with you over drink shortly. Whilst we wait for any questions, I'd like to remind those not registered with us to do so in order to be kept up to date with suitable opportunities in the coming year. And those of you who are registered with us, please do update your profiles, which you can do via the link in the footer of our email sends, in case your requirements have changed after hearing what has been said today or have changed based on market conditions changing in the last few weeks. Also, you might see on the screen a selection of current off and on-market deals we're selling: convenience, medical, motor, retail, pub assets across London, Southern England and Wales, yielding between 5 and 10%, with lot sizes from just 175k up to £3 million. So if any of these jump out at you and you'd like to know more, please reach out to us. Any questions in the room, or would like to just take it over to the drinks after? I know there are 20% of you that want to do that. So yes, tell me. Okay, so the question is, are we ever going to go back to the auction ballroom? For David.
Well, COVID rates have gone up today, if you look carefully, Pritesh. Sorry to say it, but that's fact. We are generally constantly monitoring everything. And we've been doing this for 2 years now, since March 20, and we had to react very, very quickly in March 2020 to go online. By the way, we are streamed, so it's as close as you can get to an auction rather than sort of eBay style auctions. So we've tried to make it as close to an auction as possible. And you know, something maybe next year it is something that we will generally dip our toes in. We haven't got plans at the moment to do it, frankly. And I think the only auction house that has done is a residential auction house with the initials BM, and they've tried it, and but no one else has yet. We don't know is the honest answer. I'm very relaxed. I miss you guys. I really do. I don't really like talking to a computer on auction day, because that's effectively what happens. But you know, we have telephone bids and we have internet bids, like we were doing in the room anyway. And also, I have to say, for the small little lots, and we do sell a few 150,000s. Would people have travelled down to the auction room to buy those, or are they happy buying them online? I think the latter. I'm not sure all of them would have been. I'm not sure we would have sold all of those, and we had quite a few in the auction last week. You like the coffee as well? They do, and plenty of people like the hotel cutlery as well. They go away with it, and then who gets charged for that? Now, I know, we love the social, we miss the social, and genuinely, I really wanted to come back. We haven't made a firm decision yet, and I don't think the other auction house have either. Big one. And that's where we stand.
What about the vendor's lunch, John? Good luck with that. Okay, so thank you for that question. That was really a good one to ask. It's always good to put an auctioneer on the spot. And on that note, I'd like to close off with a few thanks. I'd like to thank Hina, Leona, and Sejal for all of your help today in organizing our event. So a big round of applause for those three. I'd like to thank our speakers once again, David and Mark, and of course, all of you live who are with us here today, as well as online. My name is Nilesh Patel. This is the Autumn Market Review 2022. Thank you and keep in touch.